Good day, everybody. To Guy here, the unknown. Today, I want us to look at something very important. Okay, I want us to look at something important, and I believe it's going to help you. So, without any further ado, I'm going to start with all the trades I've taken this week. Okay, because I want you to see how I execute these things. Okay, so guys, as you already know, this is the most explosive trading strategy for indices, and we have 5 criteria. The first criteria is to identify trade volume before the session starts. We do this roughly 10 to 5 minutes before the equity opens. So that tells you that you have the entire day to yourself. You're only coming to your charts during the US session. Okay, identify trade volume before the session. I have a lot of videos on that if you are still new. The second criteria is actually to wait for the equity to open. So we do nothing until the equity opens. We do nothing until 9:30 US time or 3:30 South African time. Okay, and then the third criteria is actually to identify trade volume during the session itself. The fourth criteria is to wait for an evidence candle, and that's when we enter and target 50 pips. Okay, so guys, already you know the first criteria and the second criteria. Now I'm just going to be showing you the trades that I've taken. So I'm going to show you from the third criteria, which is actually identifying trade volume during the session. So we are not market makers, and the least we can do is to wait for market makers to do their job. Once they've done their job, we wait for them to show us what they are now doing. So that's when we enter. Okay, so as you can see, we always follow chart patterns, because chart patterns helps us know what they've been busy with. Okay, we are not gonna guess directions, and most importantly, we don't know what we're gonna do. We don't know if we're gonna sell, we don't know if we're gonna buy. The market is gonna tell us what they are gonna do next, and then that's what we're gonna do. And guys, these are indices, so 50 pips shouldn't be a hassle. Okay, shouldn't be a hassle. So even if it's a counter trend, we're gonna get paid. Okay, so look at this, guys. This is a pattern, this is a pattern, this is a pattern. And if you need to know all about these patterns, I have actually draw all the most important patterns for you, and I put them in the playbook. It's in the description. Okay, look at this, guys. This is a pattern, this is a pattern, this is a pattern, this is a right angled triangle. For those who know patterns, this is a right angle triangle. Okay, as you can see, it also looks like a triple top. Okay, it looks like a triple top as well. So they are sending people up, they're sending people up, they're sending people up. At this moment, we're not going to make a decision up until they give a big candle that closes outside the pattern, because they can still break up to the upside and then keep trending. Okay, and then another thing, we're not going to execute until the candle closes. This is highly important, and most people tend to miss this. We wait for the candle to close, or else we wait for at least when there is roughly 2 or 1 seconds left. That's when we can execute. Why? Because most of the time you'll find that the candles are very big in candles that there are very big candles that are breaking out, yes, which is part of our criteria. However, when there is roughly 5 or 10 or 15 seconds left for the candle to close, it pulls back and closes as a pin. Okay, so if you're gonna actually be chasing every candle before it closes, you're gonna find that they're gonna punish you most of the time. Okay, so guys, as you can see, this one broke out and it closed back inside. However, we didn't take our trade. As you can see, there's no trade taken. The only trade was taken here. Why? Because the candle closed. There is a pattern, and now there is an evidence candle. Okay, this means all our criteria have been met, and that's when I executed. And as you can see, my execution got fulfilled on the next candle. Why? Because I always wait for the candles to close. Okay, I always wait for the candles to close. So as you can see, I took my position here and I targeted 50 pips. Important. Okay, and then again I took another trade here and then I targeted 50 pips. As you can see, both my trades actually hit their target. Okay, but I want you to realize something important here, because I know you might have a question. Why did I execute on this candle before it closed? That's simply because I already have an engulfing candle. Okay, and now this is a pullback. When they pull back, yes, they pull back and start falling down. Okay, that's when I execute. If you look at it here, I executed the moment they surpassed the body of this candle, because already I had evidence that they are going down. Okay, so I just wanted to wait until they surpass this candle. As they pull back, whenever they pull back, they give me another opportunity to scale in, and I'm still targeting my 50 pips. Okay, so I set an alert. The moment they surpassed this, the alert rang, and the moment this alert rang, I executed as quick as I could. Okay, that's why you see that the second entry was actually executed before the candle closes. But for the one that breaks out of the pattern, the one I call the evidence candle, you always have to wait for it to actually get broken. Okay, so 50 pips. In this case, I took 2 trades. This was on Monday. Okay, so this is on Monday. I took 2 trades, and if I'm to calculate the pips that I've actually took, it's 100 pips. Okay, so guys, I was supposed to add another position here. As you can see, they pulled back and fell again with an engulfing candle. I was supposed to add another position here, but I didn't because I closed the charts. Mostly I prefer closing the charts and coming back later to see what happened, and I know that either my stop loss or my take profit is gonna be hit at that point. I don't want to disturb the trades before the time. The only time I'll close it if it goes beyond 30 minutes and my target hasn't been hit. Okay, but mostly I'll close it for an hour and then come back because I don't want to spend most time on the charts. So as you can see, I could have opened another position here and another position here. If I did that, by the time prices got here, I would have got for roughly 200 pips. So you see, the move hadn't gone 200 pips, maybe it went 70 pips, but I would have been able to collect roughly 200 pips because I'm targeting 50 and I'm just scaling in. Most people wait for 200 pips straight, and most of the time they're not going to give you that. I want something that keeps replicating, something that keeps happening over and over and over and over again. And by now I know that most of you already know that. So Monday was a win, as you can see. I want to show you that this strategy works. It's all on you. You have to put in the work. You have to actually backtest as much as you can. You can't just watch this video and expect to be consistent. You have to put in the work, okay? And if you are having doubts, that's what I want to clarify here, okay? So let's see. I took 2 trades on Monday. Okay, let me see another trade that I took on Monday. As you can see the dates down here, this was on the 13th. Okay, and then again on the 13th I took Nasdaq. Why? Because this is a double bottom, okay, and they broke with an evidence candle and my order got fulfilled late. Okay, but it's because I always wait for the candle to close. So just because this is a big candle going out doesn't necessarily mean that it's going to close as a big candle or as an evidence candle. Okay, remember, an evidence candle is a huge candle that breaks out of the pattern, and when that candle closes, we are sure that everybody who went the opposite direction is trapped, and those are the people the market is actually going to punish. Okay, so look at this. The candle closed. It could have closed as a pin, but in this case, of course, it didn't close as a pin, but I waited for it to close. Okay, because I'm not sure if it's going to close as an engulfing candle or if it's going to close as a pin. I told you most of the days they will just pull back and close as a pin, and if you actually execute because of FOMO, now you're scared that they will go without you, you're gonna feel the most pain. Okay, so please avoid that by being patient. Please avoid that by waiting for the candle to close. At least wait 1 minute. Okay, why? Because if you're unable to wait a minute, you are not even trading. Your job is to take trades that have high probabilities. Okay, all the odds are on your side, all the favors are stacked on your side. Okay, so look at this. I executed this one, came back after an hour. I found that, oh, the trade didn't actually go anywhere. That's when I closed it. It was in small profits. Okay, however, later what they did was they went down, and they kept going down. Okay, so this trade for me wasn't really a win. Why? Because it didn't hit 50 pips, but it was a good trade anyway, because there are days when they will do things like this, and there are actually days when they will actually, I will enter after an evidence candle and they will pull back and close me. So I'm not going to win all the trades, hence I have a win rate. Okay, so with a win rate of 60 and a risk reward of roughly, mostly I take 1:5, but there are days when I take 1:2, but that simply means I have a higher win rate, I have a higher risk reward and a higher win rate. So all I'm gonna end up being highly in profits, and that's what has been happening for me for the longest term. Okay, that's why I'm showing you these trades. And then on Tuesday, which was the 14th, I took the Dow again. As you can see, this is the Dow. I took the Dow. I always target 50 pips, guys. I don't care how many pips it goes. Okay, so if you look here, they gave me a pattern. This is a rectangle. I love rectangles. Okay, and then again, this is a half Batman, where they give you half Batman here. Just go to Google and search half Batman, you realize what it is. And I always wait for the candle to close. Hence, you see, even here my order got fulfilled on the next candle. Okay, but it didn't pull back. Had it pulled back, I would have got another entry opportunity to add another trade, because I want 50 pips. But if they give me another opportunity to enter, I'm gonna take it. Why? Because that gives me like, I'm targeting less amounts of pips, still 50 pips, but if it's a good opportunity, like if they pull back, it's gonna give me like it's gonna hit my take profit quite quick, and again, less stress, and again, I'm not targeting much pips, so most likely they're not gonna come back for me. Okay, so I took this one. Tuesday was a very beautiful win. So you can see I got roughly 2 wins in a row. Okay, I haven't taken a loss up to this moment. Okay, so let's go to Wednesday, guys. Let's go to Wednesday. And guys, always wait for it to close. Let's go to Wednesday. Okay, this was the 13th. As you can see, this was Monday. On the 13th I took 2, but this one didn't go anywhere, so I closed it, and this one was a win as well. So I have roughly 2 wins. And then on the 15th, the 15th was actually Wednesday. Yes, on Wednesday I took on Nasdaq. Okay, as you can see, Nasdaq was trending. Okay, I should have taken it here, but I just got distracted when I was on the charts, because sometimes I do get distracted. Some people call me, sometimes I just want to go out, maybe to the restroom or whatsoever, but I got distracted and I missed it here. Okay, and again I missed it here. I was supposed to take the opportunity here, but I missed it here. And then this is where I actually scale in. As you can see, they gave me a right angle triangle, so this is where I scale in. But because I missed this one, okay, because of distraction, I only came back to my screen and it was here. So because I missed here and I only came back here, I was only able to take my trade here, and then again as they pulled back, I took my trade here. So if you look at all this execution, you realize that this execution was executed immediately when this closed, with this candle closed, which is simply the opening of the new candle. The same applied to this one. Look at the execution. I always wait for the candles to close, and unfortunately I told you that most of the days I want my take profit to be hit at least by 30 minutes. Okay, and I'm gonna take the trades and step out of the charts for at least an hour. So when I come back, if my take profit hasn't been hit, mostly I just close this trade. Why? Because these trades are supposed to be explosive. Okay, and then yes, even on Wednesday, I came back after an hour and realized that my take profit hasn't been hit. I took 2 entries at the same time. Okay, remember, in this way I'm able to take roughly 100, 200, 300 pips, but still targeting 50 pips. So I don't need the market to go many pips, no, for me to get many pips. No, I just want the market to give me good setups. Like if it pulls back, that's why I'm entering. So on this trade I was supposed to enter. I was supposed to actually take roughly 3 positions on this trade, and if it had hit 50 pips, I was gonna get roughly 150 pips by just targeting 50 pips. So this simply means if the market goes 70 pips, I'm still able to extract roughly 150 pips, 200 pips, 200 pips from it. Okay, so I don't need the market to actually go 300 pips for me to get those 300 pips. No. Okay, so this is just how I manage my trades. But I closed it here because this is my practice. If it goes beyond an hour and they haven't gone anywhere, I just want to close it because I want to be in explosive trades. Okay, explosive trades. So again they gave another pattern here after I've closed inside this pattern, because now I know that if they are giving a pattern, they can still break to the downside, and this will mean that I lost the trade. So I'm not closing it because of emotions. No, I'm closing it because it went beyond an hour and my 50 pips hasn't been hit yet, and these are indices. They should just explode to my 100 pips. Okay, so that's why I closed it. But still again, it ended up going 100 plus pips. Okay, so it wasn't a bad trade after all. So you see, 3 days in a row I haven't actually taken a loss. Why? Because yes, of course, this one was at a very big loss, at a very small loss when I closed it, but it was compensated by this one, because as you can see, this one was roughly at a tiny win. So I wasn't at a loss. But again, did I take good trades? Yes, I took good trades because there was a pattern and I took those trades. The only thing here is the fact that I missed the first entry. So guys, my process is taking a good trade every day. Okay, I don't care about how much it's gonna earn me. I don't care how much about how much I make in a day, and that's what I always say. Okay, and that's how I program my mindset. Okay, I don't care about monetary value. Yes, of course it's about monetary value, but my process is taking a good trade every day. I need a pattern. I need to see trap volume during the session, and I need to see the evidence candle, which is the huge candle that breaks out of the pattern, which was supposed to be this one, but because I missed this, it's still okay. But I want you to think in terms of the mindset. I want you to have the correct mindset. Okay, don't think in terms of how much you're gonna make in a trade. Okay, think about taking the good trade, because every day we take this kind of trades. Every day I take the same kind of trade. Today's Friday, I'm still gonna take this very same kind of trades. Okay, I'm waiting for roughly the equity opening time. Today we don't have news on the economic calendar, so I'm waiting for the time, and then when it's time, I'm gonna be looking for the same thing, the patterns. Okay, so guys, this was Wednesday, the 3rd day, and still again I took a good trade. As you can see, it ended up going in my direction, but I closed it. But for me, it's still a good trade. Okay, because that's how I measure my progress. Okay, and then let's see. Okay, let's go to oh, okay, was there a day that I missed? Yes, there's a day that I missed, which is actually yesterday. Where's yesterday's trade? Where is yesterday's trade? Okay, yes, this was Thursday. This is yesterday's trade as well. As you can see, they gave me a rectangle, okay? And okay, somebody might ask, why didn't I take this candle? It's because I don't love a candle that you see. This candle has a wick down and it has a wick up. It's not really like a candle like this. I need a huge candle that breaks out, and mostly it's supposed to be an engulfing candle. Yes, of course, this candle engulfed this candle, but look at the candle. Look at the candle. There was a video whereby I showed you different candle types from Japanese candlestick book. Okay, I want a candle that looks like this. Okay, I want a candle that looks like this, a big candle, not a candle that, like you see, they went down, they pulled all the way back, they went up, they pulled all the way back. So this has in it a resemblance of a doji candle. Okay, it has a resemblance of a doji candle. It's like something like this where they come and close in the middle. So this candle, I just didn't feel like taking it. Why? Because this is not the kind of candle I'm looking for. Okay, and then yes, they retraced back. Okay, and then they came back. When they came back, I took this one. Look at this candle. This is just a huge candle. Okay, it doesn't have those big wicks below and that big wick above. Okay, so this is the candle where I took my first position, and then yes, they gave an inside candle, and then again an engulfing candle, and that's where I took my position. If you look at all these candles, you'll see that my entry actually got executed at the end here above here. Why? Because I always wait for the candle to close, or at least until there is 2 or 1 second left. Okay, so here I took it when there was roughly 1 second left, and then that's why it executed here, and the same applied to this candle here. Okay, so the first one targeted 50 pips, the second one actually targeted 50 pips. As you can see, this is where this trade actually went up and actually ended up closing here. Okay, so I got roughly 100 pips from this move. This move went roughly 150 pips, but for me, because I'm not after the number of pips, I'm actually after the quality of the trade, and I do the same thing each and every day. I target 50 pips. Had they pulled back and given me another opportunity, I would have entered another position. So this is why I'm telling you, I'm targeting 50 pips. So even if this move can go roughly 60 pips, mostly I'm able to extract roughly 300 pips, 200 pips, 100 pips, 150 pips. Okay, I don't need the move to go all the way up or to be a huge move for me to get extra amount of pips. No, I'm targeting 50 pips and I'm just scaling in, and I want my take profit to be hit on the first move up. So you can see this week thus far I've taken 4 trades. Today it's Friday, Monday, Tuesday, Wednesday, Thursday. Okay, it has all been wins. So it's possible to be a winner. Always it's possible to be a winner. Of course, I'm not gonna say I have a win rate of 100% because I do take losses. Patterns do fail sometimes. Okay, but my win rate is too high. Okay, my win rate is high, and even my risk reward is high, because if I'm taking a trade here and my stops are just inside here, even if I lose it, you can see like this is roughly 1:3, 1:4. Okay, so you can see my risk reward is high and my win rate is high. So guys, it's possible if you are disciplined. It's possible if you keep back testing, because you need to back test to know what to do. And sometimes of course I tell you to use the 20 EMA. For me, I no longer need it, because guys, I've spent enough time taking the same thing, and I've also spent a lot of time back testing. So by now I have all the confidence. I take it without fear. Okay, if I lose it, I lost it. I know that the most important thing is not a win, the most important thing is not a loss. Okay, that's why even on Wednesday I did close the trade. It didn't actually yield anything because I closed it early, and yes, it ended up going plus 100 pips in my direction, but I really don't care about that, because the most important thing is the process. I'm doing the same thing over and over and over again. So think in terms of the process. Don't think in terms of the trade on that particular day. No, that's not important. It could be a win, it could be a loss, or else like mine, it could be something like break even, where you didn't even make much because they didn't actually explode. Okay, so that's a process I take each and every day. And guys, that's the most important thing. When you count maybe 100 trades, you will see that, oh, you are in huge profits. Okay, that's the most important thing. It's not about the results per se. So if it's a loss, accept your loss and move on. Okay, and another important thing I will emphasize right now is, guys, uh trade the same thing. Okay, find a strategy that works for you. Don't seek or chase 10 strategies. Okay, don't chase many strategies, because most of you are taking many strategies, and that's one thing that's delaying you. Look for one thing. For me, you see, I'm recording now. I have an hour, roughly 1 hour 30 minutes to the US equity time, but I'm still recording now. I don't really care. Okay, why? Because I know I'm gonna come at a specific time each and every day, a specific time, look for a specific setup, and that's what I'm executing. So focus on one thing. That's where you'll start seeing consistency. Okay, thank you guys. I appreciate you. If you are new, subscribe. Thanks.